Part 4 of the Investment Analysis and Portfolio Management Unit 1. Part 4 is all about the primary market or the new issue market. As already told that the primary market or the new issue market is the market where the company launches or issued their first shares, or the first time issuance of the shares is done in the primary market. So when a new company is floated, its shares are issued to the public in the primary market as an initial public offer. If the company subsequently decides to include debt in its capital structure by issuing bonds or debentures, these may also be floated in the primary market. Similarly, when a company decides to expand its activities, that means either using the equity finance or the bond finance, then the additional shares or bonds are also issued in this particular market. The primary market or the new issue market does not have a physical structure or form. All the agencies which provide the facilities and participate in the process of selling new issue to the investor constitute the new issue market. There are various agencies which involves in the full procedure of the primary market. First one is the manager to the issue. These are the lead managers who are appointed by the company to manage their public issue programs. Their main duties are to draft a prospectus on behalf of the company, prepare the budget related to the expenses going to be incurred in the issue, suggesting the appropriate timing of the public issue, assisting in market the public issue successfully. Once we issue the shares in the market, then it is the part of the manager that he has to assess the marketing to make it successful, advising the company in the appointment of registrar to the issue, underwriters, brokers, banker to the issue, advertising agents, etc. Then that means he or she is the first person in the primary market who is going to suggest another agencies involved in the primary market. His last role is to direct the various agencies involving in the public issue. Next person involved in the primary market is the registrar to the issue. In consultation with the lead manager, registrar issue is appointed. Quotations containing the details of various functions they would be performing and charges for them are called for selection. Among them, the most suitable one is selected. It is also ensured that the registrar to the issue had the necessary infrastructure like computer, internet and telephone. As registrar to the issue normally receive the share application from various collection centers, so he or she must need the computer, internet and telephone. They recommend the basis of allotment in consultation with the regional stock exchange for approval. Then registrar to the issue arrange for the dispatching of the share certificates once the shares have been allotted to the shareholders. And the last, they hand over the details of the share allocation and other related registers to the company. Next agency is the underwriters. Underwriter can be a person or an organization who give an assurance to the issuer to the effect that the former would subscribe to the securities offered in the event of non-subscription by the person to whom they were offered. They stand as a backup supporters, and underwriting is done for a commission. Underwriters usually purchase the shares of the company on the behalf of the issuers, and if there would be loss of the non-issuance of the shares, then that particular loss would be borne by the underwriters only, and for that he or she receive a commission for the underwriting process. Underwriting provides an assurance against the possibility of inadequate subscription. That means, suppose an underwriter purchases 1,000 shares, but only the 950 shares has been sell out to the issuers, then the remaining 50 shares are the inadequate subscription, and this is the responsibility of the underwriters as they are providing the insurance or against that particular inadequate subscription. Some of the underwriters are financial institutions, commercial banks, merchant bankers. It can be the members of a stock exchange, Export and Import Bank of India, etc. Underwriters are exposed to the risk of non-subscription. For such risk exposure, they are paid an underwriting commission. Next are the bankers to the issue. The responsibility of collecting the application money along with the application form is on the banker to the issue. When registrar to the issue allows the investors to send send them the application form, then it is the responsibility of the banker to the issue to collect the money on the behalf or in the money attached with the application form. Bankers charge commission beside the brokerage, if any. Depending upon the size of the public issue, more than one banker to the issue is appointed. When the size of issue is large, 3 or 4 banks are appointed as the banker to the issue. Number of collection centers is specified by the central government. Banker to the issue should have branches in specified collection centers. Now, for the promotion, for the marketing of the primary issue, we must need an advertising agents. So advertising a public issue is a very essential for promotion. Past track of the advertising agency is studied carefully. Tentative programs of each advertising agency along with the estimated cost are called for. That means whenever we called any advertising agency to come for the with the quotation, then he has to present its tentative programs along with the cost associated with the each program. After comparing the effectiveness and cost of each program with other, a suitable advertising agency is selected. The advertising agencies take the responsibility of giving publicity to the issue in the on the suitable media. It can be either newspapers, magazine, hoarding, press release, or it can be the combination of all. Next agency involved in the primary market is financial institution. The function of underwriting is generally performed by financial institution. Normally they go through the draft of prospectus, study the proposed program for public issue and approve them. Some of the financial institutions that underwrite and give financial assistance to the primary issue market are the IDBI, IFCI, ICICI, LIC, GIC and UTI. The lead manager sends copy of the draft prospectus to the financial institutions and includes their comments, if any, in the revised draft. Now, there are some functions of the primary market. Basically, 3 functions are there associated with the new issue market. First is the origination. Origination is the origination of the new issue associated with any company. So it is the preliminary work in connection with the flotation of new issue by a company. It deals with assessing the feasibility of the project, technical, economical and financial, to make all arrangements for the actual flotation of the issue. Origination work also include the decisions that have to be taken on the following issue, that at what time we have to float our IPOs. Next is the at what type of issue we have to float. There are different kinds of different types of issue we will discuss it later on. Next category is the price of issue, that at what price we have to issue our IPOs in the market. Next function that primary market has to perform is the underwriting. It is an activity of providing a guarantee to the issuer to ensure successful marketing of the issue. It can be an individual or institution which gives an undertaking to the stock issuing company to purchase a specified number of shares in the event of shortfall or inadequacy of the subscription. Underwriting activity in the NIM is performed by large financial institutions as already discussed, along with the commercial banks and also by some brokers. Next, the last function of primary market is the distribution. The new issue market performs a third function, and that third function is that of the distribution of shares. This is carried out by brokers, sub-brokers and agents. New issue have to be publicized by using different mass media such as newspapers, magazines, television, radio, internet, etc. New issue are also publicized by mass mailing. As I told you that there are different types of issue, that is known as the methods of floating new issues. There are different kind of issue. First is the public issue. Public issue involves sale of security to the members of the public. That means it is open to all. The issuing company makes an offer for the sale to the public directly of a fixed number of shares at a specific price. This offer is made through a legal document known as the prospectus. Public issue is an invitation by a company to the public to subscribe to purchase two securities offered through a prospectus. Public issue are mostly underwritten by a strong public financial institution. Company has to incur expenses on various activities such as advertisement, printing, bank's commission, underwriting commission, agent fees, legal charges and many more. Next kind of issue is the right issue. Right issue means we are providing the right to the existing shareholders to purchase the new issues. Right issue involves selling of securities to the existing shareholders in proportion to their current holding. As per Section 81 of the Companies Act, when a company issue additional equity capital, it has to be offered first to the existing shareholder on the pro rata basis. Right issue is an inexpensive method as the offer is made through a formal letter to the existing shareholder. Next is the private placement. Private placement is a sale of securities privately by a company to the selected group of investors. They can be their near and dear ones, they can be their relatives, they can be their company mates. The securities are normally placed in private placement with the institutional investors, mutual funds or other financial institutions. The terms of issue are not negotiated between the company and investors. A formal prospectus is not necessary in the case of private placement. This method is useful to small companies and closely held companies for issuance of the new securities, as they are unlikely to get good response from the investing public for their public issue. They can also avoid the expense of the public issue and also have their shares sold. Now we will talk about the advantages and disadvantages of the primary market. There are the near about 8 advantages of primary market, and we can have the many more. I listed out the some of the advantages. Very important avenue for investors. Productive use of the economic savings. Facilitate capital formation. Offer reasonable rate of return on savings. Facilitate production and productivity. Induce economic growth. Promotion of stability in values of security. And last, facilitate technological upgradation. Now the disadvantages: possibility of deceiving the investors, no fixed norms for project appraisal, lack of post-issue seriousness, ineffective role of merchant bankers, delay in allotment process, poor mobilization of savings, hesitancy among the investing public. Thank you.